Well, where are we with gold? Well, that's a great question. So obviously, what's happened in my view is that the sovereign debt crisis issue has become more apparent to more people. It really has hit the mainstream, and that probably started in this fall, September, as we saw it squirt from the 3,000 range up into the 4,400 range briefly, and a little below that now. And I think what's going on is people are just beginning to recognize that they will have to print more money. And gold is always very good at smelling that. And as we speak here today, we're just at the end of the September or October, and what we saw is that the SOFR is blowing out, and which is the overnight lending rate, and then also the Fed repo facility is getting tapped. And we also just had a Fed meeting where they basically said they're going to have to start QE again. And so gold smelled that all in advance of it happening. And in my view, now it's going to happen. And, gold could very easily consolidate here, or, liquidity crisis trade down to 3,700. But I'm pretty sure in a year or two, we're going to be at, 5, 6, 7, I don't know, higher. Mainly because of what drove us here to begin with, which is that these governments can't stop printing money. Yeah, and pivoting over to looking at silver now, it's amazing, right? I mean, we've broken through the two all-time highs. The Hunt brothers squeezed it up to $50 in 1980, and then in 2011, on that run coming out of the GFC, it went up to 50 as well. And then, of course, we suffered big drawdowns after both of those, and here we are. We went through 50 for its new all-time high. It was the only commodity that hadn't hit an all-time high, really, pretty much on the board, and so. Yeah, the drivers are quite obvious. It's solar panel demand, electrical demand, and investment demand in India and other places. And it still is a monetary metal. It's obviously bulkier and harder to transport than gold, but there are still a lot of people who hold it. And for the everyday man, actually, it's easier to buy. I mean, somebody says, "Well, I'll buy an ounce of gold." Well, that's a big ticket.
Yeah.
Just about anyone can afford an ounce of silver, and so. There's been a supply deficit for many, many years. And what I think is finally happening is, the world again is waking up to the monetary debasement issue. And they're asking, what can I buy that protects me? And gold and silver are the two most natural, long-standing historical choices. And so that's where they go. And so, to me, I mean, I've seen projections, and Michael Oliver and other smart technical analysts that suggest that, I mean, I think we see 7,500, 125, $150 silver. Time frame, I don't know. I mean, I'm pretty sure 75 could happen in the next 6 months. But, after that, it trends higher. I mean, and the thing that's most interesting is that the implications for the silver miners on that are really quite stunning.